So, hello everyone. A very good afternoon. Sabya, it's great to have you here with us. India is at a time when we are focusing a lot on growth in the next decade, right? And in that, we are seeing that financial services institutions and the entire ecosystem is looking at bringing in more new to credit customers
आज
within
मैं
the
अपने ओट्स
ecosystem.
लेके
At the same time, it is happening at a time when regulators have become much more stricter, right? Even when it comes to financial decisioning. But at the same time, how do you use data? That brings forth the question of balancing risk with speed. And you are somebody who's right in the thick of it, trying to build those operating systems for banks and financial institutions. So let's start with maybe, let's take a step back and talk about what happened in 2020 when AI actually hit the ecosystem. And initially, we were a bit skeptical, right? Because it's a high stakes sector. So what has changed? Because now I think Perfios is very bullish on AI. And you are looking at bringing it and making it a big part of the ecosystem. So, what has changed over the past 4 years, if you can help us understand that?
Thank you, Mansi. Thanks, Samir and the entire Digital Fifth team for having me here. Audience, bear me if my voice is not very clear, having a bad throat. Mansi, to answer your question, it is not just about Perfios, but the entire ecosystem. Whether it is BFS or non-BFS, everybody is wanting to build new use cases, new things, riding on AI. Now, AI is not very new because in some form and shape it was always existent. It's just that it has evolved to the next level, which has become so easy to use that people have now started appreciating that technology. I think ML was the first form which showed us the power of what it can do. As an organization, we were always using ML very, very heavily. And I think those early days when we used to try to build models and showcase to the ecosystem, people would, kind of little wary about will it work, will it not work? And we were also unable to push because we did not have enough proof points to say that it will work. But what happened over years, and largely if I say from 2020 onwards, I think three things converged. And those three things, the first one was that the cost accuracy crossover happened. What does that mean? Pre-2022, let's say 2022, even till 23, the kind of accuracy that the model was throwing and the improvement which we could measure as against the traditional model would be around in the range of 2 to 3%. So the uplift was 2 to 3%. But over the last 2 years, the improvement, the models, with the help of a lot of, I would not say just LLMs, but mostly SLMs, because it rode on the Indian banking ecosystem and the behavior and the patterns that the models have learned, we can safely say we are seeing about 18 to 20% of improvement over the earlier models. And on top of it, because I said cost crossover, we are seeing roughly about 40 to 50% of cost saving as against the earlier ones. So that's the first reason why the convergence is happening, and I think everybody is focusing on that. Lots to be done, lot has to move, but I think at least the kickstart has happened. That's the first point. The second one was, from an India perspective, the regulator set the ball rolling last year when they came out with the clear, I would not say direction, but they came out with the AI governance roadmap, and they very clearly called out saying that this is a roadmap and we are setting a guardrail how to use and not going to block any kind of innovation. What did that do to the ecosystem? The question that everybody was asking as financial institution, should we, became to how do we build use cases in a guardrail fashion? So that was the second thing that happened. The third big thing that I feel which was a real inflection point was pandemic, which we usually today don't discuss. But I would want to remind that actually COVID tested us with all the models that we were using till then. What was the efficacy of it? Most of it started failing because it was a very, very unusual event. And that time we needed flexibility of the models which AI is able to give today. So I think that was one inflection point also which pushed. So I would bucket these three as the convergence point which is making the AI relevant in today's banking ecosystem. That's what I would say. And then again, further, there are many things that we can go on and on. But I think it is going to become, AI is not just about a model or a technology. It will become the bedrock as an infrastructure for the banking ecosystem.
Maybe we can stay on that for a bit. Like you said, there's already guardrails on how and where you can function in. But even then, how are you looking at, things when you are building for AI operating systems? How do you make sure that it is also easy to audit those systems wherever or whenever a regulator requires?
So I think, let me reframe this a bit. The concern is not with the AI, but the concern is with the AI that you cannot govern or audit. So AI itself is not a problem. But if you have an AI which you are not able to audit or govern, then there is a challenge, which is what we are trying to address. How are we trying to address this? So a couple of things, I think. Again, we are seeing convergence of multiple directions. RBI's responsible AI guideline, which came in last year. We have global standards like ISO 42001, which is very prescriptive in how it is not to be taken as a feature, but as a base when you are building any model, so that it can be governed. That's the second one. Third, I think India's free AI framework. So free is obviously not free. I hope everybody understands what is free. But they're all pushing towards the same destination. So when I see 42001, and there are people are just getting used to 42001. We are used to different kind of standards. But this is more how I think the convergence will happen between AI and also the data privacy law that our country has rolled out. So it's a nice way to see how we are building models which, when you are kind of trying to productize those, have you taken enough care and you have built enough guardrails? What is the data sets that you are using? Like we do in our case as well. What are the data sets on which you have pre-positioned those? When it will go to production, will it be able to create enough lineage and logs that can be checked post facto as well, so that if something has gone wrong, where do you go back and trace it? So enough traceability. I think these are already been taken care by many companies. And I would say that all the standards that I spoke about, whether it is RBI guidelines, whether it is the 42001 or the free, which is the India free AI guidelines that has come out, tells us what should be done, what not should be done. And if we can prepare accordingly, and I think there is again another committee meeting on 12th, which is done by Niti Aayog, specifically on this, that what should be done from a skilling perspective, what should be defined, those are things that we are also recommending from the industry standpoint. I think the next 1 year will define what are the guardrails that will be evolving so that there is enough lineage, enough trust that is built on this, because banking works on trust. So I think that's what the model has to solve.
If you can touch upon those recommendations from your end, what would those be?
Yesterday I had a meeting and I was strictly advised that it is confidential unless this is, this is Niti Aayog plus ministry, the MITI and with Piyush Goyal. So unless this is presented to the ministry, the document will not become public. So please bear with me for another 2 days till the time it is done.
Makes sense. We are also at a time when there's excess of data. There's a gold mine of data that we are looking at. At the same time, regulator is also asking for deeper, oversight on the borrowers. Weekly credit reporting is going to come up very soon. So how do you, make sure that at this point of time, just the fact that there's so much changes in every, week-based fluctuations, banks do not fixate on that and actually are able to, look at and bring in more new-to-credit customers despite that?
So I think the 7-day pulse, which becomes effective 1st April, is a very transformative step. The only view that I have on this is, while most of the people are thinking that it should be used for an underwriting purpose, I would say it should be used more for a portfolio purpose and not an underwriting purpose. That's the difference I would like to draw. While everybody expects this is transformative, but little bit of shift from that thinking process. The reason I'm saying portfolio, because what happens? Why do you think any institution, any financial institution, let it be bank or a NBFC or a fintech or a cooperative or a small finance bank, when you underwrite, what is your first objective? The first objective is how would you get your money back, which you have lent, right? So you draw your policies basis, your risk appetite, and how you will be able, what is the collectability of that, right? So I think the reason why NTC in the country, which is due to customer, has not happened so much in certain segments, is because we did not have enough data or profile or ability to get back the data in real time. Which over years, there are certain public policy measures has been taken so that it gets into place. This is one such step. By that, what I mean is, I'll get into a collection because that's a very sensitive topic. What happens is, by the time you get the first 30 DPD, actually the person or an entity is suffering for more than about 90 to 120 days. But you get to see the early sign much later because you don't get an inflow of information so fast. Yeah, there are certain ways that today it's happening, but I think more structured format is this, when actually a weekly reporting will happen, and you will be able to make it more empathetic than a punitive collection way to make it work. And I think that's where, if you take a portfolio angle, you will open up an NTC as a segment, then going and trying to change an underwriting policy first. So that's what I mean. I don't know whether I answered and everybody understood, but what I'm trying to say is, you have to see whether how this data is going to help improve your portfolio and collectability, which in turn will help your underwriting to NTC, and not directly going and changing to do something on NTC side. Because your question was more on NTC.
If would want to ask another question on the topic of AI, because there's also a negative side of it, right? There's frauds and there's risks there. Because of those changes, you can expect that the KYC norms as we know it right now can keep changing, which could also later on impact on your compliance costs, on banks' compliance costs going ahead. So how do you manage that risk? How do you work around that?
So I think, if I understand the question, is it about cost or the fraud and fakes that we are seeing because of AI?
See, if you currently see, it is very easy for fraudsters and people who are making deep fakes to replicate your voice and video very easily. At the same time, that could impact your know your customer norms very easily, right? That has to change going forward. So how do you make sure that your compliance costs constantly doesn't go up as that works?
So it's a very difficult one to answer in one line or very brief. But first thing, fraud prevention is not a responsibility of only regulators and policymakers. That's number one, because we feel regulators will solve it or policymakers will solve it. That's not going to happen. Second point that I feel, technology in fraud will always be ahead of regulation. So if you try regulatory measure, it will still not get arrested. So you need to figure out what technologies you are going to bring in so that you arrest it at a source. There are discussions that's happening which will arrest at a source, like at a telecom regulatory level, so that what you see, digital arrest or an app fraud, which is very common now in India, we're trying to arrest. So one financial player or one regulator cannot stop this. Okay. At an ecosystem level, are we able to collaborate? I think people are stepping forward. I think there are institutions which have carried this burden more than others, but everybody is trying to come to a common ground where we are trying to fight fraud because we feel it's a big problem. And they are advancing much faster. What if we bring in compliance costs today as a question, I think the common man will then have to take a big hit and suffer. So we shouldn't bother about compliance costs today so much unless we bring in a technology to arrest this. So I think that work is happening and there is no silver bullet for it. But I think what we are seeing as an industry, that different level of, and by the way, if we bring in AI here also, fraudsters are also using AI. So I don't think that's a solution. At a source level, if we are able to arrest, then it will be good. There are some situations which has happened where even source we are unable to, because what is emerging in last, I can say very recent ones, last 7-8 months, and I shouldn't say it, but because these are all my friends and colleagues, when account aggregator was launched, we thought that it is coming from core banking, the records are coming from where the records are hosted, which is a core bank. So system is transmitting the data to another system, which is another bank system. Everybody thought there will be zero fraud. I'm sorry to say, but in the last 6 months, we are seeing fraud in AA. So where is it? So the question is, so then you are saying, oh, so what happened? Of course, the document has not been tampered, right? But what has happened? So fraudster understood the A is a program which was launched about 2-3 years back. About 18 months is more active. They studied the pattern. In last 10 months, they have started now creating new behavioral pattern. You can't detect. So it's very simple. What's your policy in an unsecured loan if somebody has to tell me? No check bounce in last 6 months. Your average bank balance has to meet a certain number, threshold, and consistent income for last 3 months or 6 months, depending on the bank's appetite. Do you think if I have to manage in INR 5 lakhs and I have to just pump in about 30,000-40,000 of salary for 6 months, how difficult it is? So now new type of frauds have started emerging. So I think that phenomena, when we are thinking systems to systems talk, so there is no fraud. I think we shouldn't even imagine that. We have to reimagine what beyond that. So I think as we are building more models, I think the industry has to come together and collaborate. And today the problem is the reporting of fraud also takes time. By that time, the fraudster would have defrauded few more financial institutions. That has to become more real time. If these three things come together, I think we'll be able to solve. And then probably we should talk of compliance cost. Today we can't. I don't think.
Okay, on that note, I think that was very candidly put. Thank you so much for that, Sabyasachi. I think we have a couple of minutes for some questions from the audience. If anyone has any question on the topic. Okay, if we don't have a question, I think I'll use that opportunity and ask you one more question. And this would be a bit more about you as an entrepreneur, how you are looking at and how you use AI in your free time, because we are all going crazy with the chatbots, right? We are obsessed and we are constantly researching. What are you doing with chatbots?
Honestly, I don't use too much. Okay. That's a very honest feedback, because my people continuously comes and bothers me saying, sir, this is new, ye ho gaya, wo ho gaya. So I say, okay, there's too much of noise. Can you please focus on what is the problem statement you are solving? And everybody seems to be solving very superficial problem statements versus a real deep tech problem which a technology should ideally solve. One of the biggest problem I say is, today AI is trying to solve, and there are geniuses here, Ramesh is here, I mean, he deals with very large scale technology problems. But what I see when I see my team coming with some problem statement that I have solved this or that, the question that I ask is it a greenfield project? Is it a brownfield project? Most of them say greenfield. Now, bola, then there is no basis. Tell me what you have solved as a brownfield. Then they will say, oh, I have solved this. Then I said, okay, let's say there is a bug that I have introduced. How will I solve it? Then they will think they will not be able to come until next week also. So that's the problem. So what I'm trying to read, trying to solve is, what is running? Can AI solve that for me? Versus a new innovative use case, which definitely I can solve. Running problems, I don't think yet. So that's where my interest is. That's where I'm reading more and more.
On that note, thank you so much. That was a very insightful conversation. Thank you so much,
Mansi.
Sabyasachi.
Thank you so much.
Thank you so much. Thanks a lot. And that is a token of appreciation from our side.